Hey. So last that we left off was okay, I pulled the wrong one up. This is I pulled up the wrong one. Okay, so last that we did last time was we finished up all the transactions on the 28th of June. The only thing that we didn't do was the payroll section. And that section, because once again, it's a little complicated. If you guys remember way back when we did payroll, okay, so here we are. We finished entering in all of our sales. Right, here we are, all of our sales. So now we need to do the last section, which is to pay Irene and pay Albert, okay? So first things first is we know for a fact that Miss Irene is going to be a employee. Okay, hold on. Okay, perfect. All right, so let's look at Irene real quick. So it says here that we're going to pay her. So with this information, payroll expenses. So her name is Irene Jameson. She worked a total of 8 days for a total of 64 hours. She is single and has no withholdings. So, and this one, if you guys remember, right, pull up chapter 12 if you need to. But for in this case, this is Irene Jameson. She's single. She claims nobody. And so we're going to be looking at this table here. So in this case, if you go ahead and open up your commissions section, or not commission section, your subsidiary ledger, I have employees. And in here, I set it up so it'd be easier to calculate everything for you. So here it is. We typed in that the payroll date is going to be as of the 28th. Irene Jameson is going to get paid $8.50 an hour. So this is where we're going to plug in all of our numbers. So let's take a look at the calendar. Okay? Because if we remember, when did we hire her? We hired her on the 14th. And usually how payroll works is that since she's on a bi-weekly schedule, this is how it usually works. Okay, come on. Okay, here's this. We're going to look at the calendar real quick so we can understand how payroll works. So usually when she starts, anytime she starts, right? Usually if it's the week of payroll, like you get paid that week, that Sunday, you need to submit your times here. So she started working on the 14th. Okay. So let's see, the 14th, that's one. She worked on Sunday. So remember, her schedule is from Thursday to Sunday. Okay? So okay. So she worked on the 14th, the 15th, the 16th, okay? Not the 17th she has Monday and Tuesdays, or I think Tuesdays and Wednesdays off. One of those days. And then she worked on this day, and the 23rd. So that is a total of 8 days. So as I've mentioned in the table, she worked a total of 8 days for 8 hours. Okay, so here I'm going to type in she worked a total of 64 hours. So this is where you're going to calculate your total gross pay. by multiplying the two numbers together. So she earned a total of $544. Okay. So $8.50 for 64 hours. Okay. So now we're going to plug in our numbers here. So the gross pay once again was the 544. So now we got to figure out what is her marital status. We already know she's single. Okay. And 0 withholdings. Okay. So that means the amount to withhold. Okay. So we're going to be taking a look at, so when we take a look at our table, right, if you guys remember, the number of withholdings affects the total amount that is deductible. But in this case, we considered withholdings as, or anything that they are trying to either deduct, or things that like extra income, or of course, if they have children, they can claim them. But in this case, she's single. She's got nobody. We probably hired her. She's probably like 20 or something. And we're going to say she's going to claim absolutely nothing. So if you guys remember way back when for payroll, okay, this is how we do it. We have to calculate her total gross earnings. All right. We have to add anything that is related to her income. So any extra income that she claims. In this case, we're assuming that this is her primary job. She doesn't work anywhere else except for Coffee Cafe. So that's a 0 right there. And any other deduction, such as does she claim anything other than that, any benefits that we provide? No, we didn't provide anything, so no deductions. So now she is subject to be taxed at her full gross earnings, okay, which is the 544. Then what we're going to do is we're going to go to our circular E table, okay, if you guys remember this. So I've already posted it in here so you guys can take a look at this, okay. So once again, you need to look at the single bi-weekly table because we are paying her every 2 weeks, okay? And this one is going to be the side that she didn't claim, she didn't check mark that she has a second job or anything. This is where she's just doing a primary job, single status, bi-weekly table, okay? So first we're going to take a look. How much did she make? She made a total of $544. So here, she barely misses this one. She made $544. So she belongs in this bracket right here. So $526 to $1,689 is going to be her bracket. So she's subject to pay $38, 12%, and she gets to keep $526. So let's plug these numbers in. So here, so we're going to say withholdings amount. Obviously, she has nothing to withhold because she claimed 0. So now the adjusted amount is going to also be 0 because she didn't claim anything. Okay. So again, amount over is going to be $526, okay, plus 12%. Okay, so let's do this again. So this is the adjusted amount. First thing that you got to do is you got to subtract how much that the government lets you keep, in which in this case, it's going to be the $526. So circular E, we recognize it's going to be $526. So we're going to take her adjusted, right? We're going to subtract the 526 to get her a, whoa, I typed way too much. 526 to get a total of $18 over, right? Then we're going to multiply it by 12%. Okay? So we're going to take this and we're going to multiply it by the 12% because that's what she's subject to be paid after counting how much she's allowed to keep. So in this case, she's going to be charged $2.16. Now we also have to include this $2.16 with the $38 that she is expected to be taken without no matter what, right? So in this case, you're going to be taken away from the government's going to take away $38 from your paycheck no matter what. This is a standard, this is the flat rate charge. And then anything that you made extra, you're going to multiply it by the 12% to add on to what you've already are being taken away from, all right? And you get to keep $526. So now that we've done that, we know that she's going to be subject to, right, by adding the $38. So her total amount to withhold, okay, actually this should be $38. So that means her total withholdings is going to be $40.16, okay? Once again, because she didn't claim anything extra, so after we solve for this, right, did she claim any dependents? No, she's single, no children, no withholdings, no extra withholdings. So therefore, she is subject to pay $40.16 of tax. Okay? Any questions on how to compute payroll? No? Hello? Okay. So no questions in regards to payroll. You have to utilize the circular E that is particular for this specific person. And in this case, we use the circular E, right? Because she's a single and we pay her every 2 weeks. Okay? Again, you calculate her gross wages and then you come to here and you compare which bracket or which row she belongs in. And in this case, she made $544, which falls in between the $526 and the $1,689, which means she's subject to be taxed at $38 no matter what. Anything over the $526, which the government lets you keep, you get taxed at 12%. Okay? Then you combine the two to get your total FITW. Okay? Once we find this, we're gonna plug it in here. So once again, my gross pay is the 544, right? FITW, we just solved right here, which is $40.16. Okay? Now we need to solve for the rest. Okay? OASDI, which is also known as Social Security, is 6.2%. Now I'm going to use equal round for all of these so I have a nice, even number. So once again, when we compute our other percentages, we have to consider that we're going to take it's going to be based off the gross wages. So here's gross wages, so 544 multiplied by the 0.2%, comma 2. So Social Security is already $33.73. Okay. Same thing with Medicare. Medicare is 1.45%. So we're gonna do once again equal round. We're gonna take her gross wages earnings and we're gonna multiply it by the 1.45% to get a grand total of $7.89. And then net pay, right, is going to be all of this, subtract the FITW, subtract the OSDI, subtract Medicare. And that means her net pay is going to be $462.22. All right. PR, let's see what date are we on? I mean, what page are we on in the journal? We are on page 18. Check number that we're going to write is going to be so let's go ahead and write it in here. So check number 1528 is going to be her check. All right, for the I don't remember what it is. So I'm going to click here. $462.22. And who is this check made out to? Miss Irene Jameson. Okay. So here, PR is going to be General Journal 18. Right, check number 1528. Check amount is going to be, once again, the $462.22. Okay? So how are we going to journalize this? How are we going to journalize this in our journal?
Credit checking.
Credit checking. Okay, good. Salaries and wages what? Expense. Good. So go ahead and look into your chart of accounts and tell me what number that is.
Salaries and wages 60810.
Okay. Salaries and wages expense. How much is going to be the total salaries and wages expense? No. No. $544. Okay. What do I need to list under that?
Some payables.
Yes, some payables.
Employee FITW payable, employee OA and SDI, and employee HI payable.
Perfect. And then lastly, checking. So all this, remember, we're taking money away from her paycheck. But is that money ours?
No.
No.
Taxes.
It's taxes that we owe the government for having Irene as an employee. So in this case, yes, we have employee FITW payable. Okay. Employee FITW payable. Right? We also have employee OASDI, also known as old age survivors disability insurance, which is also known as Social Security, yes. Okay, then we have employee HI payable, which is also known as Medicare. And then lastly, we're going to write her her check. Okay. So again, how much was the FITW? What was her federal income tax withholdings? 4016. How much was her Social Security? 3373. And how much was her Medicare? And then last but not least, how much was her checking written out for? 462.22. Now I'm gonna go ahead and double confirm. Is my grand total amount here going to be the 544? Come on. And in this case, yes, it's exactly $544. So once again, I'm going to make a note right here saying that this check was written out to Irene Jameson. Okay. Check, paycheck, number 1528. Okay. I don't know what other details I could place in here, right? She's just an employee, right? I could do regular employee. Okay. All right. There you go. So now we need to complete our ledger. Okay. So let's go ahead and fill those numbers in our ledger. So first we got is salary, wages, expense. This is going to be in operating expenses under payroll. So here we are under payroll expenses. It's broken down to salaries and wages expense. And I didn't write in all the numbers, but we'll fill them in as we go. Okay. So the date is the 28th. And we're going to say that this is for Irene Jameson. Okay. You could put any details in regards to how many hours she worked, what days she worked, but in this case, it's pretty straightforward, right? She's an employee. You allow her to work full time, 80 hours for every pay period, right? Up to 40 hours a week. She's there from Thursday to Monday. Okay, she requests Tuesday and Wednesdays off. So that means we allow her to work the maximum of 8 hours a day, 5 days a week, 40 hours. So she's a full-time employee, and we don't provide any benefits for her. Okay? So any other details that is in regards to that, you're going to place that in the notes to the financial statement, that you have an employee, she works this much time, or she's a regular full-time employee. Okay? But you don't need to put it in the notes because we already know who she is. Right? Now, post reference, once again, General Journal number 18, and we debit the account for 544. Okay. So now next is going to be employee FITW payable, because we're going to make payments, or we owe the government, yes?
You don't put the accounts number and general journal for employee.
Yeah, because I'm going to do it as I go when I plug in the numbers.
Okay.
Yeah. So liabilities, right? These are all going to be considered payroll tax liabilities. So if I scroll down, it's going to be one of the largest sections in here. So let me scroll up actually. So I have accounts payable, then I have Visa payable, then I have payroll liabilities. Okay, so breaking down underneath it, I have salaries and wages payable. Okay, I also have commissions payable. Here you go, employee FITW. This account number is 24030. 24030. Okay. So here I'm going to say the date, and this is going to be for Irene Jameson. Or I can just type in Irene. Right? General Journal number 18. And it's going to be a credit for the $40.16. So once again, same thing. It's going to be on the credit side for $40.16. Okay. Next I have is employee OASDI, which is account number 24040. 24040. And it is for the total amount of $33.73. So 628. Once again, this is for Irene. Credit for the $33.73. Okay. Then right under it, we have the employee HI. Once again, it's 628. This is for Irene. General Journal 18 for $7.89. So in this case, this one is account number 24050. Okay. Now that we're done with that, we only have one more left to do. Checking. So I'm going to go to my assets all the way at the top. Checking account. Check number 1528. Okay. And I'm going to write paycheck. General Journal 18. And it is written out for the amount of 46222. Okay. So what is my total ending balance?
845972.
Perfect. Okay. All right. We don't need to do subsidiary ledger because we've already completed the subsidiary ledger. Okay. So any questions so far? We are completely done with page 18. Okay. No questions? Okay.
No questions.
Okay. So what else do we have to compute if we computed Irene's paycheck?
The company payable.
We have to look at our company taxes for having Irene as an employee. So once again, let's go visit the subsidiary ledger once again. And right underneath is going to be company payroll liabilities. So once again, it's going to be based off of how much Irene earned. So in this case, we know that Irene earned $544, right? That's her gross pay. So let me grab that there. Gross pay is $544, right? OASDI, which we solved from above, right? Which is going to be $33.73 plus her Medicare for $7.89. Her FUTA, okay, FUTA is 3% or 6%, excuse me. Federal unemployment tax is 6%. Okay, so it's going to be 6% based off of her total earnings. So once again, I'm just going to do the equal round formula. 544 times 0.6%. She is subject to $32.64. Excuse me, guys. Okay. SUTA, which is the state unemployment tax. All right. If you guys look it up, as in the state of Nevada, if you guys are a brand new business, you guys have to start off at 3%. Okay. So in this case, if it's 3%, I'm going to go ahead and do equal round once again. And I'm going to calculate the $544 times the 3%. And I forgot the comma too. All right, comma 2. To get a total of $16.32. Right? Workers' compensation, right? I told you that in this class, you're going to strictly only know workers' compensation to be 1.36%. It will depend on your company and how much you want to invest into workers' compensation. So 1.3% is just a common one. And it's not a requirement because, once again, depending on what kind of company you are, if you're a construction company, you better make sure that your workers' compensation is more than 1.3%, 1.36%, because construction workers are most likely to be highly at risk at being injured at the job. But in this case, I just want you guys to know in this class, we're just going to act as workers' compensation as 1.36% of their total earnings. Okay, so once again, I'm going to do another equal round. Okay. So 544 times the 1.36%. How much workers' compensation is she subject, or are we subject to pay? 73.
740.
740. Good. Now we just add up our totals here, right? Because that's going to be the total amount of payroll taxes that we are subject to pay. So we're going to pay Social Security, Medicare, FUTA, SUTA, and workers' compensation to get a grand total of $97.98. So not only do we have to pay her $544 for just having her as an employee, we have to pay an additional $97 for having her as an employee. Okay. So what is my journal going to look like? Payroll liabilities, okay? But what kind of payroll liabilities?
So company beta, company futa, company suta, right?
Correct. Okay.
Payable.
Okay, so all of those are going to be payable. Okay, so right here, it's going to be company FICA. I think I forgot the word payable. Yeah. Company FICA payable. company Fuda payable. Company SUDA state unemployment tax payable. I think it's just workers' comp in the payable. Okay, so in this case, FICA is going to be considered added together. So Social Security and Medicare. So what is the total amount here?
4162.
Oops, 7.89 gives you, oh, I didn't have my 33.73 plus $7.89 gives you 41.60. Did you say 63, 62?
62.
Perfect. Okay. How much is going to be FUTA?
3264.
And then SUDA is going to be 1632. And then workers' compensation was, I think, $7.04. Yeah. So, okay. So, where are all of those going to be taken out from?
Accounts payable.
Not accounts payable because they're already payables themselves already.
That's payroll expense.
Payroll what expense?
Would be payroll tax expense.
Payroll tax expense, yes.
60830.
60830. Perfect. Okay. So again, do you guys have all the payables down? If not, well, I'm just gonna do it as I go when I go into the ledger. Okay, we're gonna we're gonna type in as we go. So once again, I need to confirm that my total amount is going to be for $97.98 in taxes. Okay. I'm also gonna make a note right here. Pay roll taxes for Irene. Okay. So for every single individual person, you're going to expect that every employee, you're going to have a separate company, FICA, FUTA, SUTA, and workers' compensation because it's based off of the person's salaries that they earn or the wages that they earn. So in this case, if you are going to be doing this all for one particular or for all your employees, make sure that you know which one belongs to which because once again, if you're just tallying it all up, right, and you need to place it into your journal, right, as you make it as all, you added them all up together, you're not going to be able to make an association of who belongs to who. Okay, so it's important that you journalize it each individual employee separately. Okay, because once again, it's not based on the total amount, it's based on their earnings. Okay, so now now that I have this, let's plug it into our ledger. So once again, I'm just going to do it in order just so then I don't forget the expense here. So here we go to expenses. If you keep scrolling down, we have commissions expense, and then now we have payroll tax expense. So once again, I'm going to write the date, and I'm going to write Irene, because that's what we're paying these taxes for. It's based on Irene. So general journal number 19 now, and we're going to debit the account for $97.98. Okay. Back to our liabilities. If we keep scrolling down, now we see company FICA payable, right? And it's account number 2460. Okay. So company FICA, right? Type in this. We're going to write Irene. General journal number 19. Right? And it's going to be a credit for the 4162. 4162. Okay. Then now we have next is going to be the FUTA payable, company FUTA payable. General Journal 19. And the FUTA was for $32.64 on the credit side. Okay. Then we have, what was the account number for that one? 24070. 24070. All right, now what's next is going to be company SUTA. $628. Once again, Irene. General Journal number 19 for $16.32 on the credit side. All right. Last but not least, we have workers' compensation. For $7.40. Okay. Account number 2490 for workers' compensation. So 24080, 24090. Okay. Now we are completely done with Irene's, for calculating Irene's paycheck, but also calculating our taxes for having Irene. Okay. Any questions? Okay. All right. What's next? What's next?
Commissions for Albert.
Commissions for Albert. Okay. Where do we find the commissions for Albert?
Subsidiary.
Subsidiary. Okay, good. So here we're going to go to commissions expense and let's take a note. How much did Albert earn?
$140.18.
140.18. Okay, so that's it. We just have to write a check for 140.18. Okay, so yes, ignore this table here. I think I didn't. Yeah, 140.18. Perfect. Okay, so how am I going to journalize this transaction?
Debit commissions expense and credit checking.
Perfect. Okay. So COMISSION, commissions expense and checking. Okay. What is the commissions expense account? $68.20.
820.
Yes, and then 10/100. Right, and it's going to be for 140.18. So if we're only writing Albert just a check based off of 10% commissions, do we need to also calculate any federal taxes for Mr. Albert?
No, he's not like an employee. Like a regular
Correct.
employee.
Correct. He is an independent contractor. He's solemnly based off of commission, so he is not on my payroll list, but I just treat him as if I pay him on the same pay period. Okay? But he is not my employee, so I am 100% not responsible to pay any taxes. He doesn't pay any taxes off of his commissions, right? He's only subject unless like I have any other deductions, like let's say I offer meals, a meal plan or fringe benefits. That would be a deduction towards his earnings, but I don't offer anything to him. Okay, so therefore, I don't need to pay any taxes on him, and he doesn't take any taxes out of his paycheck at whatsoever. He's not going to be considered a statutory employee because he even though he's not going to be someone that I pay on payroll, he all his job is just to come into work and work as commissions. So he doesn't even have to come into work if he didn't want to. Okay, so now that I have that, and now I'm going to go ahead and write my check. So what check is this going to be?
$15.29.
Yes, for 140, is it 140.18? Excuse me.
Yes, 140.18.
140.18, and we're going to write this to Mr. Albert Allen. Okay. So back to my journal. Pretty straightforward. I'm just going to write here Albert's paycheck. %, sales, comma, check number fifth. I cannot type today. 1529. Okay. All right. We have already completed the subsidiary ledger because we just figured out what the numbers are. And now we need to do the ledger. Okay. So here we are, the ledger. Wrong one, sorry. The ledger. Okay, we're going to go to commissions expense. So once again, we're going to go to operating expenses. And here it's going to be one above it, above payroll taxes. And 28. Once again, I'm going to put 10% sales. Oh, I have to write Albert too. General journal number 19. We're going to debit for 140.18. Okay. Then we're going to go ahead and write the check. So 128. Check number 1529. Once again, I'm going to put paycheck too. Even though he doesn't do payroll, he's not on our payroll, at least we know that this is a check for paying someone to work for us. Okay. General journal number 19. Okay. And it's going to be written out for 140.18. So what is my new adjusted amount in my checking account?
83.94.
Good. 83.1954. Okay. So we've done Irene's paycheck. We've done Albert's paycheck. Now what has happened here?
We're paying ourselves.
We're paying ourselves. That is correct. So, owner's going to withdraw from the company. Or in this case, he's going to withdraw from the bank. But once again, proper standard procedures is you should write yourself a check from your company's books to your personal account, right? So, how am I going to journalize this transaction?
Owner's withdrawal, debit.
Owner's withdrawal. Account number
3200.
32,000. And once again, I'm going to take this right directly out of checking and checking for 10,100. Like I said, standard rules of procedures to ensure you are not doing fraud is you should write yourself a check. You should always write yourself a check. Never, ever go to the bank, withdraw money, and take it for your own personal transactions because that's going to be, a possibility of fraud, right? Unless you actually, submit a journal saying that I took this out money, this is what I did. Yes, you can do electronic funds transfers. Just know that you want to be very careful. The most proper way to do it is to write yourself a check. Okay? Even though you have access to your own bank, That's just another way to prevent from the IRS thinking that you're frauding your own company. Okay. So in that case, what check number am I going to write?
1530.
1530 for how much?
1500.
Okay. And if you guys remember, who's the owner of this company? It is Mr. Bob Mason. So let's go find Mr. Bob Mason. Okay. So 1530 is our check. And it's for the 1500. All right. So what is next? We got to do the ledger. And then ledger. So owner's withdrawal, we're finally dipping into our equity accounts, right? So like I said, equity is not going to be used very often unless you either add money, subtract money, or when you're completing the ending closing process where you are transferring or reinvesting the profits into the company. So once again, here I'm at owner's withdrawal. It is now 6/28, so 2 weeks later, and I wrote a check number 1530. General Journal number 19 for $1,500. So what's my balance? It is 3,000. Okay. Last but not least, we also have to update our checking account. So assets, here we are. Okay. Check number 1530. General Journal 19. And once again, for 1500. So if I'm going to write myself a check for 1500, what is my new ending balance?
It's 68,1954.
Correct. Okay. Good. Excellent. Do we need to place this information in the subsidiary ledger?
No.
No. The owner is not going to be a customer. It's not going to be a vendor. And it's definitely not an employee. You can't work at your own company if you are under a sole proprietorship. The only exception that you can do is you can be if you are a corporate status, then yes, you can work for the company. Only sole proprietors and partnerships you cannot do. You can be the president, but that doesn't mean you are going to be under the payroll. You cannot pay yourself. In this case, you have to either withdraw from your own company. Okay? Excellent. So, I think I want to stop here because the trial balance is going to take quite some time. So we're going to take a break here. But before we go take a break, I'm going to do this right here. I don't know if you guys do it or not, but it's, for me, it's a good way to make sure that you separate your transactions in regards to completing your trial balances. So I'm going to just, put a black bar here. And I'm going to write that I'm going to complete my trial balance. Okay, right here, trial balance for week 4. Okay? And make sure you save all your work, because when we come back from the break, all you are going to be needing is just your general ledger, nothing else in your financial forms. Okay? So save all your work, save your inventory worksheets and stuff, save it all. Okay? All right, so we're gonna go take a break real quick, and we'll come back and complete the rest